Hello, good day, everybody. So in this tutorial video on using K2 robots, I would like to share with you one strategy, okay, that we're going to build together under the strategy lab. I'm going to teach you how to do it so that you can also do it on your own and take this chance to show you how customizable this strategy lab is and why everybody should be using it. So today's topic will be creating a breakout strategy that actually works, all right? So if you go to the strategy lab, you choose breakout strategy. I have been doing a lot of tutorials on Trendmaster. Also, today is the first time I do a video on breakout, and then let's do this together. Now, these are the default values, okay, and this is the default strategy parameters. Okay, so what this strategy does is the candle breakout for the number of candle in breakout will be 20 days. 21 candle 1 day, so 20. Then you have the minimum breakout level. That means 3%. Minimum must jump 3.3%, and then maximum if the stock gap up 10%, then it is not going to take the trade anymore. Okay, and this is the minimum volume requirement, right? And this strategy will take profit when the stock hits 100% profit. Okay, otherwise it has got a stop loss 30% by default, trading stop percent 30%. That means once the stock starts to move up, right, it will not put the stop loss at 30% anymore, but the robot will continuously trail according to the last trading price upwards. Okay, so if the stock move up 10%, then you can expect your trading stop to improve by 10%, which means will be 20%. Okay, and then this is the risk management, trading sizing and management. So these are the parameters. Now, if you were to just screen, okay, let's just do a blanket screening using $10,000 in the capital. Last 5 years from today, 26th of May, let's just do the test and we see, okay, what is the test result and how can we slowly, step by step, customize and make it better. This is the performance, okay? So guys, you can see that by using a default strategy, right, you will see that, not default strategy, default setting, you'll see that the strategy actually performed not too bad. Using the TM100 watch list. Remember, TM100 means there are 100 stocks curated, okay? That means these are the fixed 100 stocks that perform better than the rest of the market over the last 5 years. And you will see that our blue color, the robot equity is actually better. It is about 197% if you were to start on the 25th of May. Okay, now, of course, if you were to start in 2025 January, you will not make money. You will experience what we call the drawdown or drawdown period. That means the robot is not making money, struggling to perform. But this is normal. In any trading strategy, there will always be a drawdown period where the robot or the strategy will not be able to perform. Okay, now this is similar to 2022 during the March period. You can see from 76%, okay, it dropped until 51.8%. So this is the losing period, which is the drawdown. Okay, drawdown. So not too bad. This robot performed better, but let us see not perform better. This robot actually performed quite decent, but let us see how can we improve it. Now, one thing that you must take note of when you run automated trading system like the robot is the number of trades. Okay, there are only 64 trades over the last 5 years, which average out to be 10 plus trades per year, which is not enough data. Okay, not enough data to show that this strategy is robust. This could be a result of coincidence. So we need something that after you backtest, you got hundreds of trades over the last 5 years, so that with numbers, we are talking about statistics here. So the more number of trades you have, the more robust your data is. Okay, so we are going to go down and take a look at the drawdown. So drawdown is 18%. So by using this strategy, okay, the maximum drawdown in the system is 18%. Okay, that means the drawdown period that I have explained earlier. Now I'm going to click on customize. Okay, and then I'm going to tweak the winning parameters. Now, this is the time where you can go and take your pen, paper, and start to write down these parameters so that you can duplicate the setting and then backtest it on your own to see how can you improve better from my set of parameters. Okay, so let me just go to my notes. All right, firstly, Okay, firstly, we talk about the stock. Okay, when we talk about trading, we always talk about what to trade, right? Three questions: what to trade, when to buy, when to sell. So we tackle the first one, what to trade. So during the in the what to trade, you can either create your own watch list of stocks. Okay, stocks that you are familiar with, stocks that you follow the analysts that they are supposed to be bullish for the rest of the year. You can create a watch list and let the robot trade for you. Okay? Or you can use the S&P 500, the 500 companies that are inside the S&P 500 constituents. So let's take a look at the S&P 500. Okay, that means the 500 stocks. And let's just run the same backtest using the same strategy and let's see the performance. Okay, how does it measure up to the TM100 watch list that we saw just now? And then I will tell you which is the best. Okay, now you got slightly more trades, which is 88 stocks. But take a look at the performance. The performance is significantly lesser, okay, lesser than the TM100 that we saw just now, right? Just now, it was a big gap between the S&P 500 benchmark performance and the robot performance. So you are actually quite close to what the benchmark is doing. And the drawdown increased to 20%. Okay, 20%, you have a larger drawdown and yet your performance didn't improve. It's not something what we want. Agree with me? So, okay, we must tweak further. Now, before I tweak further, let's go to the lab reports. Now, when you go to the lab reports, right, all the back tests that you have done will be here. Okay, I think we store up to 20 reports. So you can see this is the earlier one that we run on the TM100. The ROI was 198%. Okay, what we don't like about it is the lack of trades. That means the data is not robust enough. We want statistics, we want a lot of data. Then we can trust the performance. Okay, so using S&P 500 watch list, ladies and gentlemen, 115% ROI, slightly increase in trade. But it is still not good enough. Now, profit factor for TM100 significantly beats the S&P 500 10 to 3.2. Also, definitely 10 is better. So if I were to choose between these two strategies, I would definitely choose the TM100. Okay, so let us now go back to the Strategylab. Also, this is what we have done S&P 500 and TM100. But remember, we just launched these dynamic strong stocks. So now if I choose dynamic strong stocks, okay, using the same set of parameter, let us try. You run the test and let's see how is the performance. Okay, now this list of stocks in the dynamic strong stock watch list, they are updated weekly, and remember, they are the top 10% of the strong stocks in the market. So this is the performance, 148 trades taken. Now you see, wow, significantly increase in the number of trades by at least 80% versus the S&P 500. All right, and then you can see the performance is still very close to the S&P 500, right? Your drawdown now increased to 29%. That means when the robot go into a losing streak, right, you will experience a maximum drawdown of 29% according to the backtest the last 5 years. Now, this is the max. The recent Trump roti prata tariff syndrome is only down maximum 18.5%. But although the robot beat S&P 500, we can still fine-tune it to beat S&P 500 by a mile. That means outperform by a lot. Otherwise, too close, right? It is not very interesting. Okay, so what we're going to do, customize. Now we have settled on this what the stocks want to trade. Okay, that means what stocks to trade. We have settled down on dynamic strong stocks because this is going to trade the top 10%. But the performance so far, it loses to TM100. Okay, so what I'm going to do right now is to tweak the parameters. Just now we were talking about what stocks to trade. We settled, we choose dynamic strong stocks, and now we shall talk about when to buy. So when to buy will be the entry parameters. So this is where we are going to tweak according to what I have done over the weekend, the best set of parameters. So minimum candle breakout instead of 20. This list of stocks, the dynamic strong stocks, like 15. 15 will do well. Okay, the minimum distance breakout level. That means once the stock break out from the resistance, right? We want it to break and buy immediately. So I put 0.25 instead of 3%. 3% means it break the resistance and must go up 3% before the robot buy the stock, which I think is a bit too late. So I want to buy as soon as it break out. 0.25% is decent. Okay, and the maximum distance from breakout, that means if it break up too high, don't chase. Okay, if the stock get up very high, fly away, don't chase, right? So we want to reduce this to just 5%. Guys, when you are doing your parameter tweaking, always go big number to check the results, and don't go minute like 10, you reduce to 9, reduce to 8 to 7. It is very late. Okay, in mathematics, recently I just tuition my kid. In mathematics, they call this guess and check. They actually learn this in primary school. Guess and check. That means you give it a range, okay, and then you monitor the performance. If there's a significant improvement of performance, you know 5 is good. And then you slowly adjust to 7, or then you start to jump by 2, jump by 3. So this is the way to use the parameter. You don't have to go down one by one. Volume MA, okay, I will leave it at 20, but minimum volume increase, it need 15% versus the past 20 days, which is quite stringent. Probably that is why the last two back tests, we don't have a lot of trades. So I'm going to reduce this to just 1%. Okay, and then maximum volume increase, actually volume increase, the higher the better. So I'm going to put ridiculous numbers so that I capture almost all the cases of maximum increase. So basically what I'm looking for is, so long on the breakout day, your volume, trading volume is just 1% above the average of the 20 days, I'm happy. You can take the trade. So this is my entry parameters. Okay, so now we have the what to buy. Now we have the when to buy. The next thing we're going to configure will be the, okay, we don't configure first. We step by step. Okay, what to buy, when to buy first. Let's run the test. And then we observe the performance. Slowly, you will see the performance get better and better, and then we'll settle down on the parameters to run the robot. So step by step. There you go. Here comes the report. So we still have 143 trades, and you can see there is a significant improvement in the performance during the 2020-2021 bull market. It outperformed the S&P 500, 124% ROI versus S&P 500's 33%. Okay, and this year alone, it is at 125. So 125 versus S&P 100, 101. So it has started to be better. Can you see? After I configure the entry parameters, the entry rules, it has started to perform significantly and consistently better than S&P 500. Right? Drawdown, unfortunately, increased to 37%. That means during the losing period, be expected to be squeezed by 37%. Now, this 37% is high watermark. It doesn't mean that from the zero, draw down to losing money 37%. No. Okay, unless you start here, of course. If you start early at the zero mark, that means the first day of the back test, you accumulated 125, 150% gain. Okay, and then the market go into a drawdown. Okay, for a few months, from the top to its end of the pullback, that is 37%. Also, it is not at zero, or I'm going to lose 37% of my money. No, it's not your capital, it's the profit, it's the money inside the account. Okay, so that is the drawdown. Now, of course, if unfortunately you only start when the market is at the topish, a bearish news comes in, then yes, if you start here, you're going to experience 37% drawdown in your money. This is the risk part I need you to understand. Okay, but subsequently, you will still be able to recover and win back more. So this part, the return part, you must also understand. Also, where you start is important. Of course, the best is to start during the bear market when the index already down a lot, which also means that the market has already down a lot. To start your robot, you are at an advantage position. Okay, so this much about drawdown you need to know. If you have any question regarding the performance, regarding the drawdown, to understand better, feel free to ask ChatGPT, or you can ask DeepSeek. or otherwise you can also comment below the video and I will explain to you. Okay. If I have enough questions, meaningful questions, I can also do a follow-up video. Right. So this is the performance after we tweak the entry. Not the best. Okay. I think more tweaking needs to be done, but let us compare to what we have earlier. Okay, so you can see it is better than, okay, just now we were at here, TM100, right? So far it's the best, 198%. But remember, number of trades was not good. Okay, and if you compare S&P 500, I don't think you need to compare anymore because it is the worst of all. And these are the two dynamic strong stop. Okay, without tweaking the entry, it actually was better, slightly better than the performance of those that we tweak the entry. Perhaps the exit rule haven't tweaked. That is why with that set of entry, we still haven't optimized the profit potential of the system. So once again, let us go back to Strategylab. Okay, and then now we will tweak the exit parameters. Okay, currently the system based on the default setting, it is taking a maximum profit of 100%. That means no hit 100%, it will not lock in profit. That is quite inefficient. So what we want is, let's not limit the stock profit potential by the percentage. Okay, if it can climb 1000%, let it be. Also, if I put 1000 over here, it will enable the robot to ride all the way up to the highest ever. Okay, if I put 1000%. But the next thing here I want to introduce to you is the trailing profit. Okay, why use trailing profit? Trailing profit will enable you to be able to ride the trend and maximize the profit potential. So that is why we need to enable this trailing profit strategy, and we are using candle low break. You can also play around with others, okay? But today, I just want to show you in a very quick video how I get a very good breakout system. So this is the parameter I'm going to do. So I will only kick in the trading stop when the stock price has already moved up 5%. If it is within 5%, trailing stop do not come in. Also, I need the stock to move up 5% before the trailing stop come in, and the candle low to take profit will be 7, not 10, but 7. So once I have this 5 and 7 done, I have set the exit parameter for profit taking. That is the when to sell, profit taking. So having when to sell, we need a when to cut loss. Yes, there will be time the robot will be wrong. So we need to exit. So I'm going to take away the trading stop loss strategy. This one is not used. Okay, I don't want to use this. I want to just use a very simple 10% cut loss rule. Okay, 10% cut loss rule. So when the stock come down, instead of go up, comes down and hit 10%, I'm out of the stock. Okay, so this is what I'm telling the robot to do. So now with the when to exit, when to sell, set for taking profit and set for stop loss, we shall run the robot again. The big difference over here is we have set a trailing stop. Previously, there wasn't any trailing stop in the previous test. Okay, so in this latest test, we have included the trailing stop. Guys, take a look at the number of trades. It has bumped up to 282 trades versus the 140 just now. And guys, can you see the performance of the robot has increased significantly and tremendously versus the S&P 500? So year to date, right? Year to date. For 5 years to date, currently the robot performance, overall performance is 263%. And S&P 500 is up close to 96%. Okay, now this is the performance, so significantly better. This is what we want, right? And you scroll down, your equity drawdown, okay, it becomes 30%. Only 30%. Is it good or bad? 30%. So it is already better than the 39 we saw just now. Okay, and to reach 30% downside versus a 270% upside, or this is where your trade-off comes in. Or in order to enjoy the high profit potential, you need to be able to accept that, okay, the robot may take a 30% drawdown. You need to accept. Also, if you can accept, then you can run this robot. If you cannot accept, then you need to continue to tweak until you find a better one with a higher ROI and a lesser drawdown. Okay. So this is the very decent robot, right? But just now, there's one more setting that we didn't do. Notice the average fund utilization is only 90%. Okay, so we can go to customize the robot, and this is where under the trade sizing and management, okay, this is where you can play around with the parameter for the trade sizing, how many shares to buy and how much to risk per trade to improve your ROI, to improve your funds utilization. Oh, that means throughout the 5 year, average utilization rate is only 90%. So in order to increase that to maximize your opportunity, that means use more funds, okay, and also to improve your ROI, guys, I set this to 3. Okay, you can see the effect. I set this to 3. Minimum trade size $100, maximum trade size is 1 million. So this one basically tell you that take the smallest trade ever, take the biggest trade possible. So this one I will leave it as a default, and then I come over to the maximum open position. Now, maximum open position for your portfolio currently is at a ridiculous number. Is because you want to max out whatever the portfolio can take on. 10 stock, 20 stock, 25 stock, bring it on, or just do the stock. Now, manually trading, you will not be able to focus so many stocks. 20 stocks, 25 stocks, you will lose control. But being a robot system, it shouldn't be a problem. The robot will do the monitoring for us anyway. Okay, so maximum trade to take per day, I'm going to increase it to 10. Because to do 3, okay, versus 10, when we run the test, you will be able to see the difference, guys. So I'm going to run the test. Okay, so basically what we have done, we have selected what stocks to trade, when to buy, when to exit, and now the money management part, how many shares to buy per trade, how much to risk per trade. And then we'll see the final performance. Okay, so right now we have 239 trades, decent for 5 years. Okay, and then you can see your ROI for 10K account pop up all the way to 400% over the last 5 years. Annualized return is about 39%, and your fund utilization rate is still at a 91%. So this is about max already. Even if you increase it any further, it will not go above that because your account can no longer afford to buy any more stocks. So this is about the max already. Okay, and your drawdown is 30%. Okay, drawdown is 30%. So the trade-off to enjoy a high profitable strategy like this breakout strategy, your drawdown you must accept is 30%. Okay, 30%. Now we are at the low. Okay, now we are at the low. The previous high was in November 2024. So if you start right here, right, currently you will experience a 30% drawdown. Okay, max lah, 30% drawdown, but right now is about 16%. Okay, now if Donald Trump don't do anything funny and the market continue to rise to all-time high by end of the year, you will be able to enjoy huge profit potential. Okay, huge profit potential. Now, so this is the way to set and trigger and tweak the robot for this very simple strategy that works, which is the breakout. Now let me customize the bot. Okay, so under the lab reports, right, you will see the strongest performance right here. The latest that we have tweaked together is the 419% ROI. Profit factor is 160. So profit factor, if it's less than 1, it is a money losing system. If it is above 1, it is a profitable system. And you have got a lot of trades, 239 trades. Okay, 239 trades. So the data is robust enough. Okay, win rate, guys, take note of the win rate. Win rate is only 48%. That means out of 10, okay, out of 100 trades, only 48 trades going to make money. But because the system, the entry rules, the exit rule is tweaked in such a way that when you lose, you only lose 10%. When you win, you are winning more than 10% because you are riding the trend using trading stock. That is why it can still be profitable. This is a very important key concept when you are doing your backtest. Make sure you get, you understand. That doesn't mean that low win rate, wow, this system cannot use. True, no. Okay, so this is how you should look at it. Okay, now I want to try one more thing together with you. Okay, because this dynamic strong stop make a lot of difference. So I just want to run back the same entry rules and the sell rules and the money management. If I run them on the TM100, watch this. I run test. Okay, you take a look at the performance. Is it better or is it worse? Okay, guys, take a look at the equity curve. Can you see that the same entry rules and the exit rules, if I do not run on the top 10 percentile stocks in the market, but I will run it on my TM100 watch list, the performance sucks. Okay, the performance sucks. Oh, it is almost the same as S&P 500, so it's a waste of time. Okay, now let me run one more experiment with you. So now if I were to use the S&P 500, okay, I run test. It must be more than 400%. If it is less than that, then it is no good. Then it's a waste of time. Might as well take the other watch list. Okay, can you see, guys? So it means what does it mean? The same strategy, if you run it on different watch lists, list of stocks, right? The performance differs greatly. Okay, but at least you run on S&P 500, guys, you can see at least it's a 100% return. But not for the TM100. Just now was only 50% return. Okay, we can see it from the lab reports, the last three. There you go. Oh, close to 100, sorry, 90%. So dynamic strong stocks, this list of stocks, this watch list, it is worth your time to go and understand them better. Okay, here I'm telling you, it is the strongest top 10 percentile of the stock of that week. Every week, the system will automatically update this watch list of stocks so that this strategy, this list of stocks is immortalized. It will always be updated to the latest. Then you don't have to do anything. So if you are happy with this strategy, this performance, these parameters, click on the diskette. Give it a name. Okay, I call Breakout 2 because I already have a strategy already done up over there, exactly the same one, which I already turned it on. So I just want to call it BO2. Okay, once you click save, right, you go to your system robot, BO2 will appear. There you go. Okay, give it some time to load up all the statistics. Okay, give it some time. There you go. I think a lot of people are using the robot right now, therefore it's a little bit slow. So you can see, there you go. Okay, it will be here, and if you want to turn it on, activate. If you never activate, then it will not be running. Okay, so this is the thing I want to share with you today, how to use the Strategylab and how to do backtesting, how to tweak your entry rule and exit rule plus your money management to achieve a greater performance from the robot. Okay, and one more thing, before I go, I would like to address the risk. Okay, I would like to address the risk. I don't want you to have a false expectation of the performance and then later cannot achieve it. Remember, every system, every strategy, every trader will have a drawdown period. So you must be comfortable with this 30% drawdown. Okay, more importantly is it can more than compensate for your drawdown period. Whenever the market hit into a bullish run, you will always be able to trade the top 10 percentile of the stock market. And that is why the breakout will work magnificently for you. Okay, and last of all, I need to highlight this is based on the last 5 years back test data. Okay, we are doing a back test. So we have proven that over the last 5 years, this breakout strategy can work, but it is no guarantee going forward. This is standard. Every strategy, every backtest software that you use, we will have to tell you the same thing. Because this is something that everybody must understand. Because the market dynamics may change, then we have to come and tweak the parameter again. If the dynamic didn't change too much, then we don't expect the robot to suddenly cannot win at all. Impossible because of the dynamic strong stocks watch list. Okay, so you must understand this risk. Then you can use it with peace. If you cannot understand and you cannot accept, feel free to ask me under the comments field. With that, I will end today's video, and I hope you can make use of this Strategylab and tweak, fine-tune, backtest your way to success. That's all for today, guys. See you in the next video. Thank you and bye-bye.